From other emerging markets, volatility in those markets could potentially weigh on investor sentiment. Well, joining me now with her outlook on regional sovereign bonds is Joanna Chua, Vice President and Sovereign Credit Analyst with Salomon Smith Barney in Hong Kong. So, Joanna, spreads seem to have widened in recent weeks. What are the reasons for that?
Well, there's a number of factors that is attributed to that. First is obviously there's been a lot of volatility in terms of Latin America, led by Brazil, political and economic uncertainties. Another reason is there's also been a lot of concerns in the U.S. in terms of the durability of U.S. economic recovery, which the concerns have been exacerbated by accounting irregularities and concerns about corporate governance, which has wreaked havoc in the U.S. equity markets. And that has sort of rose global risk aversion at this point, and that has been able to affect some of the bonds in the region.
Well, indeed, Brazil's creditworthiness is drawing attention to similar risks in other emerging markets. So what impact is that having on Philippine bonds?
Well, I think, yes, the correlation between Latin America and Philippines have picked up in the past couple of weeks. And that's largely because I think now people are seeing some of the underlying fundamental risks in the Philippines, particularly on the fiscal side. With the budget having underperformed in the first 4 months of the year and expecting that the fifth month on May will also be disappointing, I think people are kind of worried about the ability of the government to meet the budget deficit for the full year. And also, there's also concern that the Philippines is a country that needs to access the capital markets for foreign funding, and that volatility and risk aversion is going to also affect the borrowing costs of the country, and that's why Philippines has been adversely hit.
So would you recommend reducing exposure there?
No, I think at this point, Philippines, I think, given the lot of volatility going on in the market, I would not be in a position right now to recommend that people short the Philippines. I think there should be some paring down of, if you're long on Philippines, you may want to pare down a little bit, only to stay neutral. You may want to move on shorter duration because there's a lot more local support on the shorter end of the curve. But I think Philippines, on a fundamental basis, yes, there are concerns on fiscal performance, but we are not going to expect to see a fiscal blowout in the end of this year. The government is making a concerted efforts to try to rein in the deficit. They have made announcements about cutting expenditures, perhaps revenue reforms are going to be implemented in the latter part of the year. There might be some revision of targets, and if we do see some slippage, there might be some slippage, but it won't be something that will be catastrophic for Philippines. So I think at this point, it's sort of a wait-and-see mode in Philippines. There will be near-term volatility, but perhaps towards the latter part of the year, as the government implements its reforms and its expenditure cuts, we're going to see better performance later in the year.
Well, as for Malaysia, we're seeing the dollar bond spread there widen, and some are seeing this as a buying opportunity. What would you suggest?
I agree, actually. I think that Malaysian sovereign credit fundamentals are very, very strong. And in fact, what has happened yesterday, where we finally got an announcement of the political succession plan for Mahathir, is very positive. For a long time, people have always incorporated succession as a risk factor. But I think now that we have the UMNO Supreme Council endorsing Deputy PM Badawi as the next Prime Minister after Mahathir, and the fact that Mahathir has agreed to extend his position until October next year to sort of iron out a smooth transition for political succession, is very positive for Malaysia in the long term. I think a lot of the concerns in the near term have been overblown. There was a lot of uncertainty over the weekend, but I think a lot of it has been cleared up on Tuesday. So we remain very positive. We don't see Badawi as a person who's going to reverse or change any drastic economic policy implementation that's going to happen in Malaysia. So we continue to feel that Malaysia is a strong fundamental credit and that we should certainly buy on dips.
So what sort of fair value are you seeing for Malaysia's sovereign bonds?
Well, Malaysia right now is on track for an upgrade. We are expecting that Moody's is going to upgrade it in the third quarter, and we have already seen it put it on review for possible upgrade. Right now, Malaysia, I think, have been hit adversely by the political news, but I think these spreads can still come in another 10, 20 basis points. Obviously, there's going to be near-term concerns depending on what's going on in the external market. What is causing volatility in Malaysia is people are concerned about U.S. recovery. But I think we at Salomon continue to believe that U.S. recovery is going to be durable in the latter part of the year. So we're seeing that Malaysia could rally 10 to 20 basis points over the course, certainly over the course of the next couple of months, as the clarity and political issues get resolved and people start feeling very confident about where Malaysia is headed.
And what about for Korea? It's seen some strong local bids from its banks. Are we seeing some value there as well?
Well, Korea is a very stable credit, and I think now in this very volatile environment, there is an argument for staying defensive. And in that situation of staying defensive, I think Korea, just like Chinese bonds as well, are one of the credits that continue to be very, very stable. So other than for its defensive properties, I think people should consider Korea. People should look at the Korean bank sub-debts to take advantage of the improvements in the banking sector. But I think Korea's upside is relatively more limited. We see more upside in Malaysia, and especially given the volatility, that is really where we would see more value in this type of environment.
We'll have to leave it there. Thanks, Joanna. I've been speaking with Joanna Chua, Vice President and Sovereign Credit Analyst with Salomon Smith Barney in Hong Kong. The dollar is at its lowest point against the euro in over 2 years. The currency is in shaky ground following a fall in U.S. stock futures. NASDAQ futures is down, suggesting markets will extend losses. Analysts say the dollar will continue tracking equity market performance. NASDAQ 100 future Globex down about 2.5%. The Japanese yen rising on the back of the dollar's fall, about 0.25%. An early morning trade, 121.04. Asia's longest-serving elected leader, Malaysian Prime Minister Mahathir Mohamad, will step down next year. More on bonds next when we ask the head of Asian bond research at JP Morgan how that's affecting trading in Malaysia. Stay with us.
Where do you stay when you're traveling on business?